All right. Hey everyone. Let's start getting going here. I don't think we'll be here the entire 20 minutes today because of the report that's coming up, but let's just jump right into it. As always, if you're listening and you're new, I keep everyone muted in the background so that our recording is clean because a lot of people watch this online later on. But if you do have questions, use the chat function, and I'll do my best to see it and try to get it answered. All right, let's just jump right into it. So today's report day. The USDA is going to give us their best guess on kind of where we stand, and I think all eyes are going to be tied to South America, both for corn and soybeans. So we want to talk about that for a few minutes. They're also going to look at what the USDA is going to do with domestic exports and domestic demand, mostly from ethanol. If you were to script out the bearish case for corn, which I'll just be upfront, I do not subscribe to this bearish case, not in any way, shape, or form. But if you were going to write it down, here's what you would say. You would say that ethanol margins have contracted. You would say that ethanol stocks have grown and that they're actually at near record highs. You would say that that's going to slow down the corn grind and that is going to hurt domestic demand. You would also say that China has lots of unshipped bushels on the books and that they're not going to take them because they have plenty of corn, and all of this tight supply talk is just talk. So that's your bearish case for corn right there, okay? And then you bring in South America, and they would say, well, South America is going to plant their second crop, and they're going to plant more acres because their soybean crop got in trouble. So that's going to overwhelm the corn supply with fresh new supply that the market doesn't anticipate, and we're going to crush demand here domestically. All right, that is the bearish argument, okay? Now let's switch to soybeans, and then we're going to revisit the corn balance sheet here for just a second. If you read Twitter and you read social media and you just kind of look at the headlines, you will have found people, and will continue to find people today, that are just overwhelmingly bearish the entire grain complex. I mean, bearish corn, bearish wheat, bearish soybeans, walls of supply coming everywhere, and we're just going to drown ourselves in grain, and the world doesn't have any type of a food problem. And I think this is why they think that, okay? So this is South American soybeans, and I apologize, it's not a real fancy chart, but this is coming straight from the USDA numbers, okay? So in Brazil and in Argentina, we have where the USDA originally started their guess for this year, this 2022 year, versus what they did in January, versus what the trade expects the USDA to do today to the crop sizes. And then over here is what they have in 2020 and 2019 versus what what a lot of the analysts are thinking might actually be reality down in South America. So really what I want to show you is that after crop losses, right, the trade expects a Brazilian soybean crop of 133 million metric tons. That's a lot of bushels. That's a lot of bushels. Okay, so for every 30 million metric tons, you've got about 1 billion bushels. Okay, so they're growing a big crop, and if you look at the size of this crop historically, they're right. It's a monster. I mean, this is like the second or third largest crop that they've ever raised. And look at Argentina; it's the same thing. It's even after the crop losses that they've sustained, they're still on pace to grow a monster crop. And so you've got the same setup that we've had here for the last 2 years, which is we've had adverse weather, we've burnt states up, we've had all kinds of problems and issues, and yet we continued to raise record crops. And so I think that the bearish camp, I think that they just cannot wrap their heads around the fact that the biggest producing countries in the world continue to produce at record levels, and yet we rally price, because the opposite is supposed to happen, right? You increase supply, you're supposed to decrease price, because we gotta create new ways and find new demand sources to let it happen, or to use all that stuff. And so they just and by they, and I'm not trying to be negative to them at all, I get it, record crops, and if you're just looking at supply side, it should overwhelm. And so if you're an end user and you expect these huge crops, then you should just sit back and wait, because as that supply is coming to market, the market should collapse and encourage you to use it and buy it and store it, right? Well, that's what China thought this year. So China was sitting back and they were looking at this number. They looked at, hey, 51 bushel an acre, a U.S. soybean crop, and high prices. So South America is gonna plant all the beans in the world, and they're gonna grow it because weather's gonna be good. And so China deferred all of their shipments. They pushed everything out that they could, and now they are caught. They are caught short the market to the tune of billions of bushels, because South America doesn't have them to ship in the time frames that they need them. So that's what's caused this gigantic rally in the market. Is the world's largest population and importer of grain is caught dead short, and they're not anywhere near out of the woods here, because this is what the trade expects, but this is what the major people down in South America with boots on the ground are saying could happen. And Argentina could actually be worse than soybeans. So you're talking about potentially over 1 billion bushels of soybeans alone being gone out of the supply chain, with the world's largest consumer caught short. So to think that beans are going to break before we plant and before we get good enough growing weather to ensure supply, I think it's just not accurate. So yes, we continue to grow record crops, but guys, demand is just off the charts. You know, we've talked about this over and over. I can't find any historical point to replicate this, where we've seen massive price expanse with margin expansion as well. You know, crush margins are huge, and feed demand is off the charts, because the world's just that big, and so you just got to sit back and realize what's happening is that we need more. A 138 is not going to cut it. 144 is not going to cut it. We need more grain. We got to encourage the production of it. All right. So now let's talk about corn, right? Because corn's a little bit trickier, and here's why. Brazil grows their crop in 2 stages. About 25 to 30% of their crop, of this 118 million metric tons, about 25 to 30% of that is being grown right now. The remaining part, 2/3 to 75%, is grown in what's called their safrinha crop, which isn't planted yet. It kind of mirrors our crop. So the argument is, well, if South American beans burnt up, then what they're going to do is plant a larger safrinha corn crop and increase the supply. So this 118 number is actually low. It's going to be I mean, take your pick, 125, 135, 150, right? It's just going to be a monster crop, and we're going to overwhelm the supply chain here in the next 6 months, after they're done growing it. And that's what they think is going to happen. But my question is this, and we're starting to see this in the spread action in the nearby. If roughly 30 million bushels of this crop, 30 million metric tons, is being grown today, okay, that would be about 25%. If roughly 30 million bushels is being grown today, and the trade expects expanse on the safrinha crop, how are they coming up with an expected total production of 113? How are they losing 5 million metric tons, or 175 million bushels, with all of that argument in play? Where's it going? To me, that means, how bad is this actual nearby crop? Because it's not telling you that this nearby crop is down 5 million metric tons. It's telling you that it's down 20. it's down a massive amount, which is why you've seen the March corn contract here in the US in the last few weeks or days rally to a 6 cent inverse against the July, when a couple weeks ago it was trading at a carry. So the market is telling you in the nearby contracts that the South American situation is really tight because and it's calling the corn to market. So I think the situation is really tight, even though historically speaking we're growing monster crops. I mean, look at that, right? We're huge. We're 20 million metric tons above anything that they've done before, and yet we're rallying. We're rallying it like crazy because we just flat out don't have the supply. And again, China's caught short. All right, sorry, that's 10 minutes on what's going on there. But that's why everyone is so focused on South America this year, because it really does matter. And personally, I don't think the USDA is going to do anything. I don't think they're going to change a number. They might lower the crops a little bit, but I think that it's going to be one of those reports where it comes out and the market is jittery for 5 or 10 minutes because the algorithms want to have some fun with it, and then we're going to go straight back to where we are, which is digesting that dilemma that we just talked about. So, and the weather forecasts moving forward in South America are dry. They are hot, they are dry, and the La Nina pattern is entrenched, and it doesn't look like it's going anywhere. So, and it's starting to talk like it could impact us here too. So there's nothing bearish in the weather forecast, there's nothing bearish in the demand forecast, and there's nothing bearish on the supply side. So I don't see a big drop coming. If it does drop, I think it's just going to kind of rebalance and push some guys, encourage funds to take a bigger position because of just all those fundamental reasons that we just went through. All right, so what are we looking at technically here? Well, corn is just kind of grinding higher, right? It's not explosive. It's just kind of dull. I mean, you know, we've talked about this with several of you. It feels like the corn market is actually down when we're up over $1.30 over the last 3 months. But it actually feels like we're down because we're not getting that giant move like we are in soybeans. But I don't think you should worry about that because I think it's coming. You look at the acreage war that's getting ready to happen here, and you've got to look at cotton, you got to look at oats, you got to look at all the oil seeds, and you've got to look at soybeans. And every one of those markets is just blowing higher left and right. And so corn is not going to break with all those other rallies happening. It looks to me like, as long as we don't get a horrible bearish surprise, I think corn's going to blow on up out of here. We are going to get another 13 here in a couple days, but I think we want to be somewhat skeptical of that, given our time frame and the number of bullish catalysts that could be out in the market. The market's got to extract pain from the most people, and who's not covered? Well, it is the end user. They are not covered out, and they have to procure feedstock in a market where the world is watching billions of bushels of feed grains contract right before their eyes, and they don't have the coverage that they need, and they've got to compete with China to buy it. So they've all got to come to the one place where they can get it, which is the futures market. They've got to bid it up because they don't have anywhere else to go. So this chart looks really, really good. Breakout up above 642. I think corn's off to the races. All right, let's talk about soybeans because that's where all the action has been happening, right? So soybeans, you've got this gigantic move up to the upside. We blew through our 1543 target, and now we're looking at 1601. Beyond that, you got 1750, 1850. Let's look at the continuation chart so you can see where we are in relation to previous highs. We've had this nice big move here. We're coming back to last summer's high at 1678. I see no reason that it won't go on up and test that. And then if I back this chart out a little bit and I can pull in the 2012 highs right in here, you're a hop, skip, and a jump, and just a few days away from that. Do we have the catalysts that could propel us? Yeah. You've got the world's largest, one of the world's largest populations and largest consumer caught short the market into a La Nina weather event with our crush margins at all-time highs. Like, yes, we can blow through that, because if the market decides it's got to ration demand, it's got to violently do it. It's got to rally and find a price point where the end users stop buying it. And we are not anywhere near there, because we've rallied from $7 a bushel. We're trading 15, we're trading almost 16, and we've increased margins on it. We've got to go a lot higher in order to ration demand, unless something shifts in that weather market. So if beans do it, can corn do it? Yes, absolutely they can. And there's nothing on this chart that would suggest that they won't, from that perspective. So that leads us to wheat, which, oh man, what a tough one, right? Like wheat, it's just, it's up 20 cents on Monday morning, and then by 10 a.m. it's down 20 cents. And you're getting these 40-cent swings. We had it last Monday, we had it last Wednesday. It tried to do it again, but yet here we are at $8. So it feels like corn. It feels like it's down, and it's not. It's at $8 a bushel. And why is that? Well, it didn't get to $8 on Russia, on Ukraine. It didn't get there because it forecasted Putin acting like a wacko. It didn't do that. What it did is recognize that that it was too cheap. It was too cheap relative to corn and relative to global demand and supply, and it had to take itself out of the feed rations. And now, as corn has come up with it, it's darn near back in the feed rations. That's why it keeps getting bought. We've been talking about this for weeks. You've got drought in the African growing regions. You've got inflation happening in spades all over the world, and you've got feed grains across the planet contracting. Wheat is going to get bought on any significant breaks because it can't afford to get put back into the feed rations. So I think corn's going to go, and then I think that wheat's got to go and outpace corn. So I still think that this 15 or this $9.50 $10 mark is a very reasonable target to achieve. I don't see that changing unless corn does something dramatic and we turn off ethanol, or something happens geopolitically that causes us to change that balance sheet. But you can't get bearish wheat with what's going on in the other grains. All right, so I know that that's really, really bullish. That's 18 minutes of all the reasons why you should go up. I did try to articulate the bearish case too, and I know that we're bulled up, and I know that we can be dead wrong too. But you can't argue with the fact that we're inverting these markets in the face of the world's largest crops that we've ever grown in history, and we're continuing to invert them and push the nearby futures contracts. That is so overwhelmingly bullish in and of itself that all the rest of it kind of melts away. So I do not think that we're anywhere near a top. I think we gotta blow higher, and we're not going to top this market out until the very last bear steps in and buys it. Markets don't die on skepticism. Bull markets die on euphoria. And I'm talking complete raging euphoria. I'm talking 2020 bearishness, when even the most bullish people got uber bearish at 320 corn because we turned ethanol off. We're in a trade war with China. We had huge supplies, and we had global shutdowns. That was so bearish. Everybody got on board, and price did what? It turned around and rallied $4.50 in the face of all that bearishness. That's when a market ends. It's when everyone is completely extreme. And you can't look at Twitter or anywhere else and not find bearish people today. We're nowhere near the end of that for that reason alone, because all those people have got to feel the pain and they've got to jump on board it. And I hate that for them, but that's just the way that thing's going to end. It's not going to end yet. All right, that's 20 minutes. We could go all day long talking about this stuff, but stay patient, stay long, and if you're going to trade, remember there is significant risk of loss, and so you should trade in light of your own financial condition, and do it with some help. And we'd love to help you get through whatever situation it is that you're looking at. All right, have a great week, guys. We will talk to you later. If something happens, we will put out an update. Otherwise, we'll talk to you next week.